Let's get straight to of course, Ken Leon, who's from CFRA. Ken, we're still trying to dig through this report, but they seem to be beating on every unit and every metric.
They are, and I think the lead drivers, as you've mentioned, is the capital markets, trading and investment banking. Also, we're seeing strength in commercial lending. Consumer bank is also strong. Those are mostly matching up short-term borrowing to short-term funding. I think the concerns of rising rates will get 2 more increases this year, I think, from the Fed. And I think the geopolitical issues, which is, let's call it Asia at large and China, that's less than 25% of the book for most U.S. banks, including JPMorgan.
Some of this, Ken, as we begin the earnings season with a bank that seems to be so dominant, running on all cylinders, is we go down to FICC. And the headline that comes here, and folks, this is the trading part of any given bank. It's a fancy name, FICC. And all you need to know is fixed income and everything else. It's the juice of the system. And the answer is, it's a pretty good number, Ken Leon. As a general statement for all banks, is FICC as important as it was a few years ago?
It is. I actually did a write-up after the first quarter and showed that even for the largest U.S. banks, FICC and trading is material to total net bank revenue. Yes. In the case of JPMorgan, you're talking about trading being 25% of their total net revenue as a total bank, and FICC is more than 2/3 of that. So, yes, it's very important.
Okay, if you have one question, Ken, that you would ask the chief executive of JPMorgan right now, what is it? Does it regard to trade? Are they becoming too big at some point? What's your main concern for JPM, if you have any?
I think the big concern is really execution, the ability to take advantage of healthy markets, but also to be managing cost. That would be my key question. Keep in mind, with all the discussion you had before, JPMorgan raised their dividend 43% starting in the third quarter. They got a new $21 billion buyback plan. JPMorgan's leading the large banks to being a total return dividend vehicle.